morning, everybody. Well, some of you. We'll just wait for a few more people to join, and then we'll do some introductions. But welcome to SFI Live. It's the 1st of March. I don't know how we got here quite so quickly. It's a bit scary. For those who haven't been with us before, we're fully interactive, so welcome as you join. If you look at your right-hand side, I believe it's on your right-hand side, if not the bottom, your chat room. Welcome, Hazel. You can see that Hazel's in there. That's where you talk to us, and we want this to be as interactive as possible. So please use the chat room with questions, comments, observations. You can make them private, and if you don't want me to announce your name, stick it as a private message, and I will just put out the question without your name. So, as I say, we're fully interactive, so we will be taking your questions all the way through, and we will stop and answer them as we go along. Around about 11:40, 11:45, we'll be doing a criteria clinic. That's your chance to put potential cases, live cases, considerations, thoughts about case you got in there, and I will put it to the guys, and hopefully, with the lack of Holly, they will have just as much information. We've got fingers crossed from Tony there. That's good. Right, people are starting to come in, so let's do some introductions. To those who don't know, I'm Jay, just a host. I'm just here to represent you and look at the chat room and make sure we get the answer of the guys. And we'll go around the room. Tony, why don't you do your introduction first?
Yes, thanks, Jay. Morning, everybody. My name is Tony Hall. I'm Head of Business Development here at Saffron for Intermediaries, and my role is ensuring that our intermediaries get the service and the products that they deserve.
Thank you. And Phil, good morning.
Good morning. I'm Phil Lawford, National Account Manager at Saffron for Intermediaries. My job is to support Tony and our BDMs in the relationship management of some of our key intermediary partners.
There we go. So some quality people on here for you to answer questions, knowledgeable people. So get your questions into us. So just a little explanation of what we're going to be talking about today. So anybody that's joined us before or heard us on the podcast will hear Tony say on a regular basis, tell the story. And we thought it would be advisable. It's a fresh year. We haven't really done any in-depth discussion on this, but an opportunity to talk to you directly as brokers and give you some insight in how to package your cases better, talk about potential issues that might rise with the cases, and hopefully get you a better result first time. So that's a quick summary. So Tony, just very quickly, we say tell the story all the time. Just explain what we mean by that and why we keep referencing that particular phrase.
Well, there's two elements to this. I'll deal with the tell the story first, and then there's a broader conscript behind this. But we're a flexible lender. Okay, solution-based lender. So our lending policy provides the opportunity for us to take a view. You know, our policy is more grey than it is black and white. So in order to deal in that grey, we need to understand really what the challenge is that you're trying to overcome for your client. Why have they not gone to the high street? What's the issue that they're coming to someone like Saffron who looks around the edges? So the key to that is making sure the underwriters are really clear on what it is that you're trying to achieve and where the sticking point is. So as we say, tell us the story. Okay. The simple way is make it hard for the underwriter to say no, is what we're basically saying. Give them every single piece of evidence that supports why you think this is a good case and why we should proceed. And we provide that option because when you submit your DIP, you've got the ability to write notes onto that DIP. So you can explain all of that as it comes in. Or you can speak to your BDM, or you can speak to the intermediary support team who will help you and manage you through that process and suggest what you can do. So that's what we mean by tell the story.
Thanks, Tony. That's an overview. So we're going to sort of delve in a little bit deeper, aren't we, really? Because we were discussing this week, and we had this on the podcast as well, some of the issues faced in the application, some of the little bits that might be missed, or perhaps, you know, you might have to go back to your client with and say, oh, actually, the lender's asked for a bit more information on this, a bit more information on that. So, Phil, just really quickly, as a discussion point, what are some of the most common things that cause you to have to go back to a broker and say, actually, I need a little bit more information? Just some of we'll go into detail a bit later on, but just some of the issues you see on a regular basis.
Yeah, usually it's, well, there's a range of themes. So it could be information that's on the credit file that we didn't know about. So that's what's one big area is their credit history, their financial history. So there's points there which we'll see and we'll ask about. Now, sometimes we appreciate that credit files are updated. I think the agencies update them monthly. So, there might be a lag that credit might have finished. But tell us if they've got a deal that's finishing or they've paid it off. Use, as Tony said, use the notes function. So credit is one issue. The other really big area, again, we're a very more manual underwriting lender. So, we're looking at things on a more individual hand underwriting case. So bank statements are really important to us. Now, I appreciate other lenders they might use open banking, but the fundamentals are still the same. As a lender, we've got to make a holistic decision, do and understand the client's circumstances to make that risk decision. So if you're spotting something on banks, or if you see something on bank statements, our underwriters are likely to spot it as well. So don't be afraid to delve that a bit deeper. So bank statements, credit history are probably the two biggest areas that we come across where we're going to possibly ask them further information.
Tony, anything to add on top of that? Anything that you've particularly want to, before we go into more detail on each of those, anything else you want to add to that?
It's actually something we're currently working on. So Phil's kind of picked the main two, which is, do take the time to interrogate your client's bank statements and tie it up to what they've told you. Have they declared all their expenditure appropriately? Is there payments going out that aren't a loan or a credit card or something like that, but it's a sizable amount that's going somewhere else? We would like to probably know what that is. So again, tell us. It's that kind of stuff. But what we're currently working on, and this should be issued soon, is kind of the top tips from underwriting and processing departments. When you get a dip accept, we'll send out this to you saying these are the top things we're finding brokers are getting wrong, or we've not been clear enough, and it's both ways. So that's going to hopefully start coming out soon to give people even more certainty. This is what we need and why. So that will come out soon. So I think Phil's right. Those are the two main areas. A lot of it is undisclosed credit. It really, we'll come on to this, but it really is, you need that kind of Darren Brown moment with your clients. Look into my eyes, not around the eyes. Tell me everything that's in your life now, because it will impact your mortgage decision if you don't. So it's like, just be honest and be open, because that's what we want to be with you.
And we'll really, sorry, Phil, carry on.
Yeah, no, I mean, obviously a big thing on the horizon that is affecting our industry is consumer duty, and it's pretty much here now, isn't it? But if you're going to sum up the one key aspect of that key point, it was Rob Sinclair summed it up perfectly and really succinctly, and that is the whole purpose of consumer duty is to avoid bad customer outcomes. And I can't think of a worse customer outcome than a mortgage application being declined by a lender for your clients. So what can we do working with you, and what can you do as an advisor to avoid that bad outcome? So I think that's what today's all about, isn't it, really?
I think that's really key, isn't it? Because, the underwriters are looking to see that we are ethically lending to somebody that can repay and isn't going to have problems repaying. It's not going to, not going to cause some adverse issues going forward. So it is really about I mean, if we look at it from the broker's perspective, there's a time element here, isn't there? That if you know they're looking for the mortgage, they might have sought a house. They're perhaps in a hurry. The customer wants that mortgage quickly, so there's a lot of sort of gathering information as quickly as we can. But perhaps it's just time to take a step back, Tony, and just take a breath and go, actually, I need to go through this methodically and just make sure I've explained everything that I can explain. True?
Yeah, as they always sometimes say, more haste, less speed, don't they? You know, actually take the time to look at, you know, it really is a challenge for brokers because, you know, most of you will deal with, you know, a minimum of 10 and potentially up to 30 or 40 lenders in a year. And therefore trying to remember everything that each lender wants is a challenge. And we find, you know, whilst we have, you know, a good level of repeat business from our top brokers, we find that because we're still broadening our horizons and being more available to people who've never heard of us before, we're seeing more and more new first time submitters. So that's why we're doing this today, to really focus on, you know, how to get it right first time on your first submission, because once you know the process, it kind of becomes a bit easier. So that's kind of the key. Now, as I alluded to at the start, we talk about tell the story, but going on to what you've just said, there's a step before that. Phil and I, funny enough, talked about this morning, and it's about manage the story. And that's about having that honest conversation with your client. And if anybody listens to our SFI Not So Live podcast, you'll hear me chirping on every month about the state of financial literacy in the UK, the fact that we don't teach it at school, and that children coming out of school, young adults, and then going into home ownership and racking up debts and bills and other things and not really understanding the impact. So I suppose we're saying, you know, as a broker, and I'm sure most of you do this, but manage that story. The things we're looking at, and Phil's been on record saying this before in these webinars, is, you know, in order to get an application through, for us, one of those big things is bank statements. So look at the conduct. If that conduct is in doubt, i.e. they're using overdraft, or they're overextending themselves, or there's gambling or things like that on there, then actually that's not going to go down too well when we're assessing, particularly a first-time buyer. So where we said by manage the messages, you've got to have that brutal conversation that says, the time is not now. You're going to struggle to get a mortgage, or actually you're probably a high street client, but if you want one now, I can't take you down the high street. I'm going to have to go to someone like Saffron potentially, and you're going to have to pay more. Okay. So if you wait, you probably could get it and cheaper, or actually you're just not going to get one anywhere at the moment. So let's not bother, but let's keep in touch. I know it's a crushing feeling if you can't get it, but it's reality. And as Phil said, with the consumer duty, that's the appropriate consumer outcome, not putting somebody into a position where they can't afford a mortgage, or actually they can't evidence that they can afford a mortgage. So that's kind of a big thing for us in this process, is where you're having that honest conversation that, and it's the challenge between, you've got targets to hit, you've all got your livelihoods on the line here, but actually it's the right thing to do. So that's one of the areas, and we'd like to help our brokers with that if we can. This is kind of the start of it. What can we do to support you, to help you in this scenario, and make it really clear to you all what we look for and won't do, or don't like, or would take a, you know, if you don't tell us up front and we find out later, doesn't mean we won't do it, but it doesn't leave a great impression. So it's all these things. Hopefully that makes sense to our current listeners.
Just to combine two things you just said there, actually, in the, you know, lending responsibility, consumer duty coming in. It's consumer duty is coming in at kind of just the right time, really, because we're in a cost of living crisis. Pennies are tight. We haven't got a lot of pennies in our pocket. Everyone's struggling a little bit. So actually taking out a mortgage now, we are having to be a little bit more cautious, surely, to accommodate the fact that people are a little bit stretched, even though it's getting a bit more positive on the line. I'm not being negative on here because I don't want to be, because I think we are actually seeing some light at the end of the tunnel now. But it is the right time to really be considering this, isn't it, Phil?
Yeah. I mean, yes and no in terms of being more cautious. I mean, I'm seeing a lot of positive sentiment in the market at the moment. I mean, the back end of last year, the outlook was from a lot of lenders and brokers I was talking to was very much doom and gloom. But the vibe seems to be cautious optimism to the start of the year because of lenders still want to lend money, and we do. But obviously, we want to do it responsibly. So, but we're seeing a lot of good news stories all the time with rates moving, lenders bringing out more competitive rates. So rates are going downwards, which is fantastic. We're seeing some criteria being flexed there. So we're seeing lenders where lenders are increasing their loan to income ratios, and they're tweaking their affordability positively. All I would say is those ones that they're flexing the criteria for are for the right clients with the right circumstances as well. So not everybody is going to get your 5.5 times income there as well. So that's where this probably chimes into it of getting your clients in that match fit position to give them the best possible chance to get the best rate and the best outcome.
Let's talk about advice, Tony, because brokers, advise their customers. We advise brokers. It's all a chain of advice and support. You said about things like bank statements, and we were talking about something just before we went live, actually, about looking on your statement, thinking, what are these payments? What's this? There's a level of almost like it's the broker and customer relationship, isn't it? It's all about pushing the boundaries and really getting that honesty and the trust that you need with that customer, so that you can get information. Because people are quite proud, and they might try and hide something or not mention something because they don't want to. So I think it's just down to the relationship building, isn't it?
Yeah, it is. It is. As I said, we were talking about this earlier, and I think it harks. Fun enough, I think it's an advert for either Lloyd's or Barclays that talks about their subscription checking service. So they will scan through your bank accounts and highlight these subscriptions that you've probably forgotten you've got, and it's on average something like £460 a year per adult, something like that. I think the figure is, if I'm recalling the advert correctly. So, as a responsible broker, this person might have exemplary bank conduct, but if you can see loads of subscriptions in there, which are fine if it fits affordability, but wouldn't it be great to your client if you could say, what are these, and actually, do you need them? So not only are you providing that great mortgage, you're saying you don't need to spend this money each month, and therefore that can go to something far more appealing for you. So I think that's taking it to the next kind of stage for us. I mean, from a lending perspective, that's not necessarily our bag, but actually, if you can see affordability is tight, and you can save them that money each month, which turns that no to a yes, then amazing. So that's kind of what we're seeing at the moment, and therefore would really advocate just taking that extra step, asking that extra question.
Yeah, I mean, we bang on regularly on the podcast about the lack of financial education in school, and hopefully that will change. But in the meantime, the reality is that's where we are at the moment. So there's a lot. I've got teenage and children in their early 20s, and they're probably not as financially savvy as probably my generation were at a younger age, because of they're living with parents for longer, buying later. So I think as financial services professional, we've all got a duty to start that education ourselves, because no one else is going to do it. So we're in the best position to take up some of those points that Tony's mentioned, that if we can put them in a better position and impart our wisdom and guidance on them, then surely that's all good.
Tony, the education piece, I've got a note in front of me when we were talking last week. I've got a note in front of me saying, when they come to apply for a mortgage, they want it then. But you said, and I really like this, and I think it's really interesting, if we could educate borrowers to think about the mortgage months ahead of time and tidy, as you were saying, look at the bank statements and tidy everything up. 3 months is the perfect opportunity if you're only given a month's bank statement to get everything right and get that rubbish that might be, something that's going to hamper them out of the way.
Yeah, as Phil said, I love Phil's analogy just then. Get match fit. Be ready so that those inevitable questions, if you've got poor conduct, aren't there.
Yeah.
Or if there are CCJs or defaults that are unsettled, have a conversation about that. Are they going to get settled? What were they for? How do I tell the story to the lender if they're not settled? Is it justifiable? If it's not, does it demonstrate a lack of financial awareness, and therefore should a lender lend you any money? It's all that kind of stuff.
Yeah, I think it's probably good to talk about probably what underwriters are looking at, particularly with the manual underwriting lender. So, we quite frequently as and our BDMs where we get calls from brokers saying, like, I've had my case declined. Why? It seems to be okay. But then underwriters talk to us about layering risk. So it's first time buyer, high loan to value as an example. It can be a real difference if they've got a history of paying rent and a track record of that, to if they're living with parents. So if the finances are under stress and they're living at home with parents, that's a bad risk indicator. So that's probably where you need to be having the conversations with your clients early and getting them shipshape. While as if they're paying a high rent commitment, then that's probably more plausible and understandable why they're in where they are, and you can probably explain that away. A dip, or that they do use their overdraft, but they're paying a rent of X amount per month, and your mortgage amount is going to be Y. That's all about. That's what we mean by telling the story, and getting it's those soft facts can make a difference between a yes and a no, rather than just the hard facts. So it's drilling down that bit further.
Tony, it's really important. We talk about this all the time to understand what the underwriter is doing and the work of the underwriter. But just talk a little bit about what you've done with the relationship between your BDMs and underwriters, because I think that's really interesting. We talked about it in a couple of podcasts, and it's really interesting how you've integrated underwriting a little bit into the BDM team so they have a stronger understanding.
Yeah, very much so. I mean, firstly, my team know as much about policy and how to underwrite as an underwriter, and I regularly test them on their lending policy, and they've all just passed with flying colours. Phil was top with 100%. Congratulations. which I would expect anyway.
That was lucky.
The one thing that we do every day, and Phil's coined this, and I love it. We have an underwriter surgery. So my BDM team and the underwriters meet every morning at 9:30. And the purpose of this is to talk through any inquiries from the day before where we need an underwriter to take a view. Okay. So firstly, if it's not within our appetite, the BDM will be telling you straight away, or should be, no, it's just, look, it's not for us. And hopefully we'll try and help you find where you could place it. Because one of the things I do task my BDMs and my whole team with is knowing who else does what, so that we can provide that arrow to point to when we can't help. Okay, because that's a really useful thing for brokers to have. So we'll take cases where it needs a discretionary decision or even an exception, and we'll take it to that meeting and we'll get a decision on that before the broker has to dip. So it's a pre-dip. So we'll have the conversation, we'll get an answer, we can come back to you before 10 o'clock the next morning or by 10 o'clock the next morning saying, yeah, that's for us, dip it, put these notes on, or no, it's not for us, or actually it might be for us in 3 months, but sort this out. So that's been the beauty of that, and that's gone down extremely well, and we probably don't publicize it enough, but it's a really valuable half an hour of time. And we do, and we do use it because I use it to track the decisions when we say no, because that's how we develop policy. So hang on a minute, I've had 15 inquiries of this, and we've said no every time. It's clearly a need. So why are we saying no? What could we do? How could we change our policy? And then that feeds into our quarterly review of policy between sales and underwriting and risk, where we bring all the feedback from our brokers, saying we've said no to this, or we've seen an opportunity to do this, we don't do that, it's causing us issues, what do we do? And that's how we develop our policy, and that's why our policy has moved so far in the last 18 months.
Great stuff. Just before I ask the next question, and Andrew, I've not forgotten about you. We'll come to your questions in a second. It's very specific, so we will come to you. I'm really keen to hear your thoughts on what we're discussing and some of the issues you've had and some of the things you've faced. Any questions on what we're discussing, please pop it in the chat room. This is an interactive webinar. We really would like to hear from you and your thoughts on it and some of the issues you've had. So let's just quickly talk about the difference between lenders. One thing you just said there, Tony, is, we common sense lending, that there's no particular algorithm on a computer that's going to kick somebody out, or feel free to jump in, whoever, but just is it more about the earlier stages and the conversation you said about the BDM saying not for us, or looking at the risk appetite and go, actually I don't think that's right for us, but how should they be using the BDM relationship? So what benefits, or what advice can you give to the brokers on developing those relationships?
Yeah, I mean, I'm well aware that as a broker, it's always a risk, because it's your reputation on the line at the end of the day, using a lender you've not used before or not used very often, you don't know well. So the last thing you want to do is risk your reputation by submitting a case with a new lender that you don't know well. So our BDMs are here to give you, and our telephone BDMs, to give you that certainty. So they want to build a relationship with you, so you understand more about us. And it's as important that you know the stuff that we don't do as the stuff that we do as well, and what we like. And how we like cases submitted to us, and that's really the role of the BDM, is for you to build that relationship with, so you understand more about us, so you've got that certainty rather than a leap of faith in trying us as a new lender, or use us again if you haven't used us for a while. It's to try and make your life easier. I noticed a really good post on LinkedIn yesterday from a broker called Victoria Barton from NS, and she put, this cannot be stressed enough. Finding the best rate is such a small part of our job. It's all about getting it over the line as swiftly and as smoothly as possible, removing the stress for the client, and ensuring that there are as few bumps in the road as possible. That's our job as a lender, as a relationship team, with BDMs, to make your job as a broker as easy as possible, and to remove as much of those bumps as possible, really. So, that's what I think's important. I don't know if I missed anything out there, Tone.
No, absolutely spot on. Look, it's the success of a lender, particularly one like ourselves who deals on the specialist and solution based, is about the strength of your BDM team. Okay, that makes the difference. Funny enough, when I didn't have a BDM team, we weren't as successful as we are now. So strange that, isn't it? So we're only just starting, but it's not so, it's not just the BDMs in the day job, but we're also at events. We run round tables, we run regional events for the BDMs in their particular region. We do the national events. We do our website, we do our, we do this, we do our podcast. It's all about supporting that education. And, beyond even us, we always make sure that our criteria is 100% accurate on Knowledge Bank, Criteria Brain, Smarter 365, all the network or clubs who have help desks have got our up-to-date criteria. It's so important for us that if you can't get hold of us for whatever reason, or you don't want to, that you still get the right answer. That's so important to us. And what I would say is, if you ever spot something that isn't right, please let us know. ring the intermediary support team, or drop us an email, or live chat us, because we don't, we never knowingly have the wrong information. I think someone used to say that about something else, but it was Waitrose, wasn't it? Never knowingly undersold. I don't think they say that anymore. So yeah, that's a really important side for us. But Phil's nailed it on the head. We're here for when you need us, and it is the BDM, it is a telephone BDM. So you've got the beauty of 2 in each region, yeah. But you've also got the intermediary support team, and they know as much as the BDMs. Trust me, they are. And if they don't, they'll know who to speak to. So there's so many people that you can get hold of for help.
Just staying with you, Tony, because I want to pick apart the BDMs a little bit, because you just said when you had no BDM team, you've got a very strong team now, but also you just said again, the regional BDMs, just to explain the fact that there'll be people in the audience that aren't working with you currently and perhaps don't realise that they have an allocated BDM that they can build that relationship with, and how to find them. So maybe we can give them that information now.
Yeah, definitely. If you go on to the Saffron Free Intermediaries website and click on Contact Us, that'll drop down to a page and you can see a BDM finder. If you click on that, all you need to do is scroll down and click on the first 2 characters of your postcode, and that will then show up the lovely faces of your telephone BDM and your field-based BDM with a bit of a bio about them and then their contact details.
They're an amazing team. We have had some of them on here.
Yeah.
If you've watched them, guys, you've met some of them, and we'll try and get them all back on over the coming months.
Exactly. No, we
the other faces, aren't we?
Yeah, we definitely will do. But in essence, we've got Simon and Sophie in the south and southeast. We've got Lee and Debbie covering the south, southwest, and South Wales. You've got Leslie and Debbie, because Debbie's because she's so brilliant, she's split in half at the moment. She's covering the central, and that's kind of, if you look at the UK and put a belt around it, where the waist is, that's Leslie, okay? And then we've got Jackie in the north, and Jackie and Lizzie, who's a telephone BDM in the north. So they would love to hear from you. And if you've registered recently, you will have heard from them, because one of the things we do is always provide a bit of saffron love with a welcome and tell you all about how we can help.
Thanks, Tony. Again, please put your questions in. We are keen to hear from you. We are going into a criteria clinic in about 10 minutes' time, which is your chance to put real life cases in. And Andrew, I know yours is there. Yours falls into that, so we will come to you in just a second. Let's just talk quickly about where you tell the story. So we'll talk about tell the story. When submitting your DIP, just Tony, you or Phil, either one of you, the technology allows you the opportunity to do this. So maybe just talk people through the process if they haven't worked with Saffron before and they haven't submitted one before. Just talk about the technology and how you leave those notes and that information that the underwriters will need. Yeah,
so pre-application, obviously we have live chat most of the time available. So that's if that's more of a quick question, you can email the BDM team, or you can phone us and talk to us directly. So that's where probably the journey starts, because again it's helping you as a broker get that certainty. If you've not used this before, if you've got something unusual, we'd much rather be having the conversation before you submit it or before you've dipped it, than and working out the queries and working through them with you. So that's at the start of the journey. During the decision in principle process, as Tony mentioned earlier, then there is that notes functionality, so you can add a note onto the case, and we can then we can look at that holistically with all the any documents, and that will help us. And we've also then got the underwriting surgery as well, so we can take your queries to them to raise if there's anything complicated that we think we want an underwriting view on.
Great. And they can find and register where, Tony?
Go onto the SFI website, look on the top right-hand corner above the nav bar and click on register. It's very straightforward.
Just an FCA number, isn't it? Is that all we need?
Yeah. If you're the first from your firm, then the firm will need to register as well, but it's all in the same process. Again, if you get stuck, ring the intermediary support number. Don't ask me what it is, because I won't remember. Well, I'll do. It's on my bottle here. 01799 582 925. There we go.
There we go. There we go. I was going to say, look at your bottom, so mine's in front of me. I can see it. And the website is not SFI, just to point out. That's not the website. It's saffronforintermediaries.co.uk. So don't type in SFI. You'll end up somewhere else. Saffronforintermediaries.co.uk. Top right corner, register for the portal. And then, as Tony said, to the point where they get in touch, isn't it? So as soon as you register, you'll hear from whoever the BDM is, won't you?
Yeah. Within once you've registered, the team will be in touch, either by phone call or by an email, but preferably it'll be a phone call. And if you don't get that, do let us know, because that is one of our key things, is that we always want to welcome you and, find out a bit about you and your firm, and is there others in your firm that we could talk to as well? So it just helps us understand the best way we can support you going forwards.
And the website's full of information, also has links to previous episodes of SFI Live. You can also find out about the podcast as well. For anyone that is interested in the podcast, we have mentioned it several times now, SFI Not So Live is available on Apple Podcasts, Google Podcasts, Amazon Music, Audible, Spotify, you find it anywhere. So if you just Google SFI Not So Live, you'll find an appropriate link if you use any of your podcast platforms. Just tick that link of join the series or follow the series, because you would have got notifications today that our brand new episode is just gone. So if you get a chance, have a listen to that. As Brian from Mortgage Advice Bureau joined us, and it was a really nice chat. So that is available today. Just quickly, we did mention earlier adverse, and I know there's been some changes and policy changes. Maybe there's a chance for us to talk about some of the criteria and policy changes you've made in the last few months, Tony, just to update those that haven't been with us or haven't seen the last webinar and might have missed the notifications. Is there anything you can tell us that might be of particular interest?
Well, on adverse, we've just broadened our appetite. Let's make it clear, we're not an adverse lender. That's not our bag. But what we will do in the right circumstances is accept that people have had minor blips in their credit profile for whatever reason. Again, tell us. But we've extended the underwriter discretion. So we'll accept. Actually, Phil, you go through the adverse policy, because I always get this wrong.
Essentially now, our underwriters have got the ability to accept or agree cases with unsatisfied defaults and CCJs now up to £500. Anything over £500 will need to have been satisfied for more than 2 years. But anything under 500 satisfied recently or unsatisfied, that's where we can take a view. All I would say is, if you give us some more context around it at decision in principle stage, if you're aware of that. So again, back to the point we made at the start about the fact finding and getting to see all the soft facts and information. Clients can get copies of their credit files. So it's always a great idea if you can, you first meet with a new client is get them to bring in a copy of their credit file, or if you're not interacted with your client recently and they're coming back to review, get an up-to-date copy of the credit file and run through that with them. So if we know about it, then we can talk and have a conversation.
Okay, thanks, Phil. Sorry, Phil.
Sorry, there's a couple of other bits. Outside of adverse, we also, one of our key areas we really want to support and do support is the self-employed. So one of the, we'll lend up to 90% for 1 year's trading. So we are very supportive in that area, and we changed policy recently to help those who have at least 50% share or more of their company. We can use not only just salary and dividends, but share a net profit, which helps a number of firms to get the money they need. So that's one area that we've done. Before we move on, Jay, there's a couple of areas that again link to this. If I can just quickly talk through. Okay. The first one is about packaging your case. Okay. Now our system currently lets you just submit a case with no supporting documentation. Okay. Which is perfectly okay. but don't expect your case to be looked at, okay? Because we can't progress it till we've got all the information that we require. And when you submit your DIP, when you submit your full application, it gives you the checklist and says, these are the things we need. Now, obviously, after the initial underwriter's assessment, they may come back to you for more. But before it even gets to that, we need all those documents. And what we see too much is this drip feed where brokers drip us a document a week and then get annoyed because we don't look at it. There's no point of us looking at it until we've got them all. So the plea from us is, if you haven't got it, don't submit the case until you've got it. You know, if there is a point of where we're going to withdraw the product, we give you at least 24 hours notice and ideally 48, as we've just done with the product we're withdrawing close of business tonight. We told everybody yesterday morning at 9 o'clock. So there is no panic about the case not being accepted if you haven't got the documents, if we're pulling a product. But if we're not pulling, get the documents together and submit them in one go and label them correctly. All of this will come out in top things I talked about earlier, but that's a real help for us. Now, we don't help ourselves because our system actually allows it. So we allow the behavior that we don't want. Sorry, guys, I'm in a glass office and everybody keeps waving as I walk past. So sorry, I keep forgetting. Apologies for that. So we allow brokers to get into the bad habits of drip feeding, but then it really does knacker our operation because we're going into the same case 6 or 7 times and we still can't move it on. So there's one plea. The other thing is an issue we've noticed with a new feature that Experian have launched for consumers called Experian Identity Protect Plus, I think it's called, which is allowing a consumer, they pay an annual fee and it allows them to control their credit report. Okay. One of the features is you can lock somebody doing a search on your credit file and provide you with a warning to say, so-and-so, Saffron are about to do a credit search, and you can lock that and stop it. Okay. The problem is, as we are finding, we are now declining cases because of it. So because we can't get the search, it reports back a thin credit file, we call it, which says we cannot find any credit. And our system just goes, well, decline then. Okay. So we're trying to get to the bottom of this more, and I'm expecting more and more lenders to have this issue. But this is just a plea for all of those using us or other lenders who use Experian. If you get an erroneous decline, check if the customer has got this locking facility and ask them to unlock it. Now, from what we understand, they do get a message saying Saffron's about to do a credit search. And I think so our challenge is at dip stage, we do a soft footprint and it doesn't trigger this lock because it's a soft footprint. Okay. We only do the hard check when they're committed to putting an app in. But the problem is we say, yes, it did. And then we decline it at full app because of this lock. So we need the lock taken off to run it. And then they can put the lock back on, which is mad, but that's the scenario. So it's just a plea. If you can ask that extra question with your client, it probably might save you some hassle. Okay.
You just educated me. I didn't even know that existed. I genuinely didn't know that existed.
It's a good thing, but
100%, brilliant.
There's an unintended consequence, which obviously is not a good thing when your application declines. The good news is, though, is if your application has been declined solely for that reason, because we've got a thin credit file, if your customer unlocks it and you tell us, then we can rerun a search, and hopefully then we can say yes. So as long as we know about it and that's the reason, we will hopefully then get to the outcome that we all want. And we do check the declines daily as well.
Yeah,
so
BDM team is on this every day anyway. So if we do miss one, then hopefully you can help us by not even have to get in this situation until we can kind of get to the bottom of it. But I don't think there's an easy fix.
We talk about education. I just sat here and learned something in the space of a few minutes that I never knew about, and actually quite like the idea of. So I might have to go and experiment on that myself. That's really useful. Thanks, guys. Question in: what makes you different, and what are the special features? I don't know if you want to elaborate on that for us, but I think we were talking about
Sure.
criteria changes and stuff. But maybe Phil, can you address that question?
Yeah, so I think it's Jose. So there's I suppose we've got 5 key areas that we lend in, five or six key areas. So first time buyers, we're in the high loan to value space. That's an area we've always supported, even throughout the pandemic, and beyond that. So we've supported the first time buyer sector, lending up to 95% loan to value. We're still strong in that area. We lend on new build houses up to 95%. And we also have a joint borrower sole proprietor product available to support first time buyers. So that's where they need an income boost from a close relative to help them achieve the loan amount they require. And where we stand out there is that we base the term on the age of the occupying applicant rather than supporting applicant. So that's probably our standout in JBSP. As Tony mentioned, self-employed, we're really keen to support the self-employed community. There's been a lot of press recently saying that there's perceptions that it's really hard to place self-employed clients. I think the actual reality is probably not as hard with, look at your specialist and your manual underwriting lenders like ourselves. So we're in the self-employed space to 90% loan to value for as little as 1 year's accounts. And we've got flexibility with more complex self-employed. So recently moved from sole trader to limited company. We can look to use share of net profit after tax if they've been if they're a majority shareholder. We've got that pragmatic approach. If they had a bad year during the pandemic, we won't build that into an average. If we can use the most recent years because we're seeing an increase in trend, we will. So self-employed is a big area for us, and also contract workers as well. So 90% loan to value for contract workers on a daily rate times 48 weeks. CIS workers, later life lending is another area for us. So we've got Rio and lending into retirement products there. So we're filling that space. Self-build is a big option. Self-build, custom build. And we can lend up to 80% of the value of the land or the property value on a renovation, and then up to 80% of the GDV, that's the end loan to value. And then buy-to-let, we're in most areas of buy-to-let. There's limited companies, individual names, and we can also help first-time buyer, first-time landlords, as well as portfolio landlords. So I've tried to cover a broad range without boring you too much, but yeah, that's sort of my summary. I don't know if I've missed anything.
You've triggered the chat room, Phil. That's definitely.
Yeah, well, I'll just add to that. Did you mention expat, Phil? Did you?
No, I didn't. So we're in the expat box.
So expat, we have a wide country list. We have one exception, which is the Netherlands, and that's to do with contracts between the Netherlands and the UK. But apart from that, as long as it's not a sanctioned country or conflict country, we can help. The biggest thing that we're excited about is our appetite for large loans. So we now source up to £2 million for self-build and residential and contractor business, and that will go up to our full range very soon. We're just dotting the I's and crossing the T's. But we're also, we are then going to be sourcing up to £3 million for self-build and for residential, and we've got an appetite for that now. We've been doing it for a while, and we tend to bespoke the rate. We won't necessarily now bespoke the rate, so you might be able to get 3 million at the pay rate that we're offering. Okay, subject to the case, but we have a real appetite for those larger loans. So if you're stuck anywhere, do have a shout. So for Jose or Jose, I'm not sure how you pronounce it, so apologies. I think let's get your BDM to have a proper chat with you about how we can help. So if we can line that up, if you let us know your postcode or your first 2 digits, we'll get the BDM to reach out and speak to you.
Thanks, guys. Every time I was going to ask you to do something, you come in. I was going to ask you about the larger loans in a second because we discussed that.
Sorry.
Didn't know, but good. Thanks, guys. Let's go to the questions because we linked very beautifully into the criteria clearing, which is really nice. Bola, I learned something new as well. I hope you all did on that Experian lock. I'm literally blown away by that. So we'll have a look at that. Tracy, what about right to buy?
We're not presently in the right to buy space, so we can lend on ex-local authority flats to 75% once they're out of the right to buy preemption period, but we're not presently assisting with right to buy cases at the present time. But that's on our radar. That's something we're looking at, and hopefully in the near future that will be a sector that we're involved in as we should be. Okay.
Thank you. Just quickly before I ask the next question, CPD certificates will follow at the end of the webinar. They'll be available to you on here. So please don't log off because you'll be able to download your certificate and save it straight away. So stay with us and we'll get to those in just a sec. Okay, jumping on to the next one. They're going to come in thick and fast now, aren't they? 'Cause we've got 9 minutes left. So, Adams, your JPSB question, based on the age of the younger occupier, is there any age restriction for the older joint borrower who is adding their pension income to bolster the case?
That's a really good question. Yeah, we want the supporting borrower to be under the age of 70 at application. So, how we work it to make it easier for you, we've got an affordability calculator on our website, which actually brings the affordability to life. But yeah, we want 70% of the loan amount to be affordable by the occupying borrower, and then the older borrower is then supporting them, and we need them to be able to afford just 30% of the total loan amount, and they need to be under 70 at the age of application. If they're under that age, then we can consider a term, depending on the age of the occupier, of up to 40 years. So, hopefully that's helpful for the right scenarios.
There we go. Thanks for that, Phil. That was very good. CPD certificate downloads link is now active, guys, so do download them. Thanks, it's very useful. I have a question. Do you still have separate products for contractors? We did sort of skim over it, didn't we? But maybe
yes, we do. Yes, we do. So that's contract workers, whether on a daily rate, fixed term, whether they're outside IR35 and they are self-employed contract workers with a limited company, or inside IR35 and use an umbrella company. We accept those on the contractor range normally. Also CIS workers as well. All I would say is if you've got an established contract worker that's been good, long track record of contracting, then we may be able to accept them on our standard owner-occupier range as well. But where we do stand out in the contractor space is they don't have to be an experienced contractor anymore. So if they've got 2 years working experience, we can accept them as a for relatively short-term time contract.
3 months. Got a 3 month contract.
3 months. Thanks, Tony.
Yeah.
So it's just 3 months in a particular sector experience.
Yeah. 3 months of contracting to demonstrate that they can do it, but it doesn't have to be the 2 years work experience in the field that they're contracting in. Okay. It can be any field as long as it's just 2 years evidence of employment. So that was a recent change actually, and but as Phil said, we are looking at the scenario of the long-term contractors and whether they should be on a contractor policy or another one. So that's one thing we are exploring at the moment.
I can see Hazel's asked a question relating to rent to buy. We're not presently doing that. We have been approached by a number of firms that sort of private shared equity rent to buy. So that's some we're having conversations. And that might be something we might do in the future, but we're at the start of that journey at the moment. So we'll see. Yeah. So not at the moment.
Thank you very much. Cheers, Phil. Bola's come in with what's the income multiples for income of 70k and over?
Yeah, sure. So if they are individually, so sole applicant earning or one applicant is earning more than 50k, we can lend up to 5 times. Below 50k, it's 4.5 times. So we can go up to 5 times over 50k, or if it's joint application or joint income, I should say, over 80,000, then we can also lend 5 times. So you could have 2 applicants, say, on 40,000 each. We could lend 5 times joint income on that scenario, those scenarios, and that's up to 80% loan to value at the present time. And this is something Tony, again, we're also reviewing our loan to income at the present time, aren't we?
I would caveat that whilst that is our policy, just being really honest with everybody, the whole case has to stack up for us to do that right now. We are looking at greater flexibility, but we're not at that point yet. So we can look at them, but have the conversation probably with the BDM first.
Great stuff. Just a few minutes left. So just guys, if we've skimmed over anything in this one, I would advise you do a quick Google search of SFI Live on YouTube, or search for Saffron for Intermediaries on YouTube, because all our previous webinars are on there, and have a listen back to some of the podcasts as well. The podcast description does tell you what we've talked about. So is there, but Saffron for Intermediaries website's good, but as Tony said, you could do it in person if you want, pop in the live chat.
Yeah, we have, Jake, we've missed Amanda's question. Right,
have we? Sorry, apologise. Where's Amanda?
That's not a problem.
Oh, no. Sorry, yeah, that was right from the start. Sorry, Ananda.
Yeah.
Sorry.
Yeah.
How about client doesn't have permanent residence in the UK, lives in a visa, bad credits such as default, semi-commercial properties, house, and so it's quite a lot here, and above cases, what would be the maximum loan to value?
I mean, it's not one for us, if I'm honest. It's that layering effect. One, I think the visa would probably not fit our policy anyway. We are cautious about residential above commercial usage, so we'd have to wait for valuers' comments on what it was, and layer those two with defaults as well. Going back to Phil's point from earlier, it's not one for us.
Yeah, so visas at the moment are up to 75% loan to value for skilled worker, health and care workers, and global talent visas. So that's our visa policy. I think we covered adverse during our conversation. I would say properties above commercial, they'll need to be in a prime residential area, probably, prime, good loan to value, and that'd be, case by case. Talk to us. Yeah,
that's the classic to take to the underwriter surgery. That would be a classic example of how you would do that. I know Phil, we're trying to wrap up. Philip's just asked a question about expat resi. No, not at this point. But again, it's on our to-do list, hopefully. But we don't do expat resi at the moment.
Okay, we are going to have to wrap up, and sadly, we've only got a couple of minutes left. If you've got a quick burning question, chuck it in now, and I'll try and get to it now. Phil's just asked, is it just Experian you use at the credit reference agencies, Tony?
We use Experian as our main, and I think if we come back with very thin, I think it does have a hop over to Equifax as well, but it's mainly Experian. But I don't know if there's any issues with the other ones. We just know of that issue that we've currently faced with Experian.
Experian seem to be the innovators, don't they?
I spoke to another building society last night, and they are experiencing the same problems. So it's not just us. I'm sure we will get a wider solution to this. Yeah.
Maybe it needs to be a question right from the start when you're speaking to your customers and saying,
I'm talking to IMLA about it anyway. So all the lenders in IMLA, the 55 members, we're looking at that together. So, but it's just one to be aware of.
I genuinely think we could have done 2 hours on this, couldn't we? We could have kept going and going and going. There's so much to talk about. But we are back again next month. We're back on the first Wednesday of every month. You will see an SFI Live. We will notify you as soon as we can on the next one and what the topic will be. Do join us. They're different every single time. We have different crowds of people every single time, so lots of different questions and things you might not think to ask. So do come and join us, and do check out the podcast. The podcast is available now. The brand new one out today. But I think we're on about 15 episodes of the podcast now. Some of them are really, really interesting. Great guests. So do go and check those out. And as Tony says, pop onto the Saffron for Intermediaries website, find out who your local BDM is, and start having those conversations if they haven't been in touch with you and you're registered. Your CPD certificate is available to download on your screen. Download that now. If you want to review this webinar back, I'll speak to the Saffron team. We should have it online by tomorrow at the latest. So do check this out and go on, and you can skip through to the bit you want to just re-go over. But that's all the time we have. So thank you, guys. That was really informative. I've actually learned so much today. I'm going to have a look at my Experian account. That sounds really useful. And I'm also going to check my payments because I'm pretty sure I'm still paying TV services I never watch. So I'm going to go through my joys of having no mortgage and no rent. I don't ever check my bank account, so I really need to get on that. But listen, thanks, guys. Thanks, everyone, for watching. And do come and join us again when we're back in April. So for now, it's a goodbye from us. Thanks, guys.
Thanks, everybody.
Thank you. Cheers.
Bye-bye.
Bye-bye.
Bye.